Hey everyone, welcome. Today, we're going to talk about something that sounds, well, pretty intimidating, right? The US gift tax. We're going to pull back the curtain on it, and I think by the end of this, you'll see it's probably not something you need to lose any sleep over.
All right, so let's just jump right in and tackle the number one fear that people have when it comes to this stuff. It's that moment you're about to give a really generous gift to someone you love. So picture this. You've been saving and you're finally ready to help your kids out with a down payment on a house, or maybe help pay for their wedding. You pull out the checkbook, and right as you're about to write that big number, this little voice in your head pipes up, "Hold on, is the government going to hit me with a massive tax bill for doing this?" Okay, let's just put that fear to bed right now. Here's the absolute best news. The person who gets the gift almost never pays tax on it. The responsibility for any gift tax almost always falls on the donor, the person who's actually giving the gift. So if you're on the receiving end, you can relax. The myth that you're going to get a surprise tax bill is, for the most part, totally false. Okay, so if the person giving the gift is the one on the hook, what does the IRS actually consider a taxable gift anyway? Let's break down the official rules of the road, because knowing them is how you can be generous in a really smart way.
So the magic words here are full consideration. It's really just a fancy way of saying you got something of equal value back. For instance, if you sell your car to someone for its fair market value, that's not a gift. But if you give that exact same car to your nephew for free, well, that's a gift, because you didn't get that full consideration in return. Simple as that.
And this is where things get really helpful. The IRS specifically carves out some huge exceptions for the most common ways we help each other out. For example, if you pay a grandchild's college tuition, but you pay it directly to the university, that's not a taxable gift. The same thing goes for medical bills. You pay directly to the doctor or the hospital. And of course, gifts to your spouse are generally exempt too. These are some seriously powerful exceptions to remember.
But out of all these exceptions, there is one that is hands down the most powerful and the most common tool for giving tax-free. It's called the annual exclusion.
And here it is. The magic number for 2025 is $19,000. You can give up to this amount to any single person you want, and you won't pay a penny in taxes. You don't even have to file a gift tax return. It's that easy. And hey, even if you go over that, you're still probably not paying taxes. You just file a form to let the IRS know, and the extra amount counts against your lifetime exemption, which, by the way, is in the millions of dollars.
Now, this is so important to understand. That limit is per person. This isn't some total cap on your generosity for the year. No way. You could give 19 grand to your son, turn right around and give another 19 grand to your daughter, and then another 19 grand to your best friend, all in the same year. All totally free from taxes and paperwork. It's an incredible tool. And you know what's really cool? This number isn't just stuck in time. The IRS actually adjusts it for inflation. I mean, just look at this data. Back in 2018, it was 15,000, then 16, 17, 18, now it's 19,000. So your power to transfer wealth completely tax-free literally grows over time.
Okay, but wait, it gets even better. If you're married, you can essentially double down on this whole thing with a fantastic strategy called gift splitter.
This is just a brilliant pro tip. See, each spouse has their own individual $19,000 exclusion. So you just combine them. Together, a married couple can give up to $38,000 to a single person, a child, a grandchild, whoever, in 2025. And again, no gift tax return to file, no hit to your lifetime exemptions. It's that powerful. Okay, now I need you to lean in for this part, because this is probably the most critical, time-sensitive piece of the whole puzzle. This amazing tool, it comes with a hard deadline. The mantra here is simple. Use it or lose it. You can't bank your unused allowance for next year. It's a one-shot deal every single year. That's right, the clock strikes midnight on New Year's Eve and poof, your entire $19,000 per person allowance for the year just vanishes. Then on January 1st, the counter resets and you get a brand new one for the new year. You got to use it within the calendar year. So, with the end of the year in mind, here's your game plan. It's super simple. First, figure out who you want to help out. Second, write those checks. But third, and listen closely, this is the most important part. The gift isn't officially given in the eyes of the IRS until that check is deposited and actually clears the bank. So make sure your loved ones get it to the bank well before December 31st. A check sitting in a holiday card on January 2nd, that counts for the new year, not the one that just ended.
And there you have it. We've busted the myths, we've walked through the rules, And you can see just how incredibly powerful the annual exclusion really is. You've got the knowledge now to be generous in a really smart, tax-free way. So the only question left is, how are you going to use it?